Drew Lunt, financial advisor and founder at Scratch Capital. Among other things, you have an interesting approach to working with business owners. What is your philosophy and process for total wealth, including how to incorporate private assets into the wealth structure?
Hey, Chris, thanks for having me. Yeah, I think it's important when making financial decisions for business owners that we're not just designing portfolios with their liquid assets, and we're actually coming up with a strategy for these business owners based on, their full financial structure. And when we look at an average business owner's, total wealth or full financial structure, it's often dominated by a few, one or two privately held assets, which is, their business. It's what generates most of the wealth for these families. It can also oftentimes carry the most risk. And so I just think business owners, it's important to look, what is the total wealth? What do they have going on with their situation, and make portfolio decisions based on that? Because I think the strategy just looks a lot different than an average, say W-2 employee with a Fortune 500 company. And some specific examples with business owners, not only do they have, their operating entity, whatever that's worth, but oftentimes they have things like real estate that's highly correlated with that business. Maybe they're the tenant in that real estate, or it's highly, correlated with the success of the business. So I think you got to look just at all things like that for business owners. And then what that typically warrants for strategies is we need to put in different, hedging mechanisms for these business owners than just say an average W-2 employee. We really want to take a close look at, what is the size of a protective reserve? If the business income dries up for, 3 to 6 months, maybe prolonged adversity for a couple of years, do we have an appropriate protective reserve in place for that? Businesses also come typically with a lot of debt. And so maybe we want to create a reserve around their what it costs to service the debt on an annual basis. And then I think taking a step back after you do all those things and say, hey, what is the actual goal for this family or business owner? And how do we align what we're doing with the business and the total wealth strategy for their specific priorities and goals?
Now, what is your approach to tax planning and strategy for business owners, especially as we're nearing the end of the year?
Yeah, so I think first off, I think tax planning should be done throughout an entire year, not just the end of the year. But there are definitely, the end of the year is when there's some specific deadlines that you want to make sure you did all the right things throughout any given year. And so I think just the big, easy tools at a business owner's disposal are, a 401k plan. Now, if you're self-employed, obviously you have the potential to have a solo 401k plan or a SEP IRA that may warrant some different strategies, but really a 401k plan, both pre-tax and Roth contributions. If the business or business owner has access to a deferred compensation plan or cash balance plan, how are those getting funded? You got tools like HSAs, maybe Roth IRAs, whether it's backdoor or a just normal Roth contribution. 529, if a priority for you and your family is funding education for kids or grandkids or other relatives, looking at 529s to see if your state is eligible for a state tax deduction there. And then if charitable giving is a priority, how can we fund accounts like donor advised funds and, take the most advantage for those, or take the most advantage of tax strategies for business owners? Do we do 2, 3, 4 years of giving into a donor advised fund on an annual basis just to take more benefit of that charitable deduction? And so I think those are kind of the big tools at your disposal. Then you got things, like tax loss harvesting that can happen throughout a year, just constantly being aware of that and how can that reduce one's tax liability. Making sure your entity is set up appropriately. And this is something I think even is a good time to look at now for maybe 2026 is, do we have the right entity structure in place, whether that's a C Corp, S Corp, LLC? That's definitely something you'd want, advice from your tax and advising counsel on. Are we maximizing QBI deductions? And then I think other tools before the end of the year, are we doing accelerated depreciation, whether we're doing, cost segregation analysis on a piece of property that the business owner owns, or Maybe there's some equipment that needs purchased that can be accelerated and depreciated. All of those other tools like that, I think are very important. But, stepping back, I do, and I'll end with this, is I think it's important for business owners not to just look at, how do I save taxes this year, but really step back, take a long-term view and say, how can we minimize tax over, our lifetime? How can we reduce our lifetime tax liability? And I think that really helps kind of systematize and think about long-term wealth planning.
Drew, a lot of great insights here, especially because business owners work so hard on their business that these are a lot of things that they might not have been spending the time considering. So thank you for your time.
Thank you, Chris.